The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon, Eastern Time at 877-927-6648. And I have to thank the great host that we had this morning, of course, and we're going to be continuing all the way through to 6 o'clock this evening, till 5 o'clock this evening. So stay tuned. Now let's go to the market. Dow's up. Let me just show this. The 10-minute E-mini chart. I was just about to change it. I always like to start off with this. We've made a leg E. In the rising up channel that we formed, there's an entire section that I call the Chapman wave repellent or sell zone. It doesn't mean you have to do that, but that's what you've got to be careful of. Now we've spiraled just above it, the little green dashed line. We're about to test the pinky dashed line inside track at 2088. We're at 2088.75. So the exact number that we'd be looking at would be 288 on the button. If over the next, we might have seen the high for the day on this spur of the moment move to the upside. Well, it was doing well, and then suddenly there was this big move up. The IBB, I don't know whether the Fed chairman said something, whatever it is, but the biotech suddenly went from -2 to a +6 right now, 261. That's good action. That should help the NASDAQ. So talking about the NASDAQ, we've got NQU 16. This is the 10-minute chart. There's almost a single leg spiral to the upside. It's actually two legs, but there was just one 10-minute bar slightly lower. This is either a continuation of the move that started this morning at 4 o'clock down to 439.94 area, or, and this is going to be big, or it is a brand new leg B, and we're still going to see C and D. That's if the biotechs keep holding very well. Let's just have a look at the VIX index for a moment. The VIX index, VIX index is down at 28 cents at 1820, holding quite well, but I really want to see the VIX index lower. Now, there are a couple of things we'll talk about. Let's get into that after I go through all the charts. ESU 16, here's the 120-minute. ESU 16, here's a 120-minute chart. I've drawn this rectangle and said there's a narrow 120-minute border. This is what I show my subscribers to my opening call every day. The daily, the weekly, the 120-minute chart. No, you're showing the monthly at this particular point. Also, we don't have enough data on the U contract. But this is very important because 2092 was the high. 2092.50 was the high at that alternate count peak D that we made a top in back on the 19th. Right there. Oh, that was the start of the 20th at midnight. So what we're looking at is a pullback to the 2071 area, 20 points, 200 Dow points. And then what happens is you start trading in the sideways band, breaking above this and just failing at 2091.25. We're 75. We're $1.50 away from making a new recovery high. I think we could do that. Now, do we do it today or not? I'm not sure. So let's just go real slowly through everything one at a time. See, the MACD and stochastic are very good. The 10-minute chart I just showed you, ESU 16. Nice move up, trying to hold in that inside track, Chapman wave inside track in an up channel. All right, a break into the 2078s, and it says, well, be careful, you could test a 2084 9-period exponential moving average, which would take you to the Chapman wave inside track buy or propellant zone. All right, enough with that. Now we're going to go to the nitty-gritties. The Dow, INDU, very important. Dow's got a lovely candle so far today. I say so far today, it's not even 2 hours into the trading day. Anything can happen through the nervousness. Now, this is what I'm hearing. The Brexit vote, this is the bookies all over the show in London. They'll book on anything. They'll book on how many times you blink in a minute, whatever it is. Most importantly, what I'm hearing is that the number of votes is suggesting that there's an exit, but the amount of money being put up, and I think money is what counts, it isn't numbers, it is the amount of money suggests that there will be a stay. And of course, Cameron made that statement, a year or so ago, about a vote. I mean, how dumb. He must be saying to himself, what did I get if I could just take some words back. All right, enough. So the Dow needs to break above 17,946.36. I say 0.36 because at 0.37, 1 penny higher, we're looking at leg B. A gray B because we're under the peak D, 18,016, June 8th high. Now, I didn't change. We were short and we're now long. We went long right there. So we covered. Let me just put that in. Covered. And went long right there. So we recovered before that, and then now we're long. All right, fine. In the aspect of support, if there is any news between now and tomorrow is the vote in London, but we won't get the news until late in the midnight or so, going into early morning, 7 o'clock. So if we are looking at the support level, if there's a big disappointment, and the chart says, we're right in the middle of a trading band, you could disappoint and you could slump 17,800, 94 points lower, gives you the 9-period exponential moving average. Break of that, and you've got a trend line support. Actually, it doesn't come in until quite a bit lower down, 17,720s. So that's that. Weekly chart is still holding absolutely beautifully. Let's look at this in conjunction with the New York Stock Exchange. Remember, this is what I said is very important for us right now. New York Stock Exchange has just made gray leg B in the daily. I tell you, the 2,000 stocks are acting really well with a gap. Nice, gray B or gray beard. And that, if it goes above the previous high, I have no choice but to put E and whatever current letter there is, above 16,618.05. All right? And look at this. The weekly chart is looking fabulous in the New York Stock Exchange. I have to tell you, I had to refrain from getting too exuberant and trying to buy too many things. I just wanted to be very cautious for subscribers. We're in nice positions. That's all I can say. I mean, let the market tell us now what the next step is. All right. So now we've got the S&P. Now the S&P is very important about the S&P. Why? Because the S&P also is very close to that peak A, that gray peak A, 2100.66. It's at 20.9781. The high of the day today is 2099.71. We're just an eye blink away from making a leg B. And boy, will that help the weekly chart because it's getting closer to a leg D. 120-minute chart. Let me just move this away for now. Don't need it. This is A, B. We haven't made a leg C there either. So, okay. And look at that. That monthly chart is broken out. I better run these quickly. You got the composite index up 25 at 48.69. You've got gold down 3 at 12.69. Silver's down 9 cents at 17.31. Crude oil is at 49.56, down 29 cents. And bonds are down a half a point. And the dollar is down 17 cents at 93.83. I'll be back. Basil Chapman, Tiger Technicians Hour, Dow's up 62. That's a lot.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The 10-minute chart, we're in that. Funny how it gets trapped in these inside Chapman Wave inside tracks. Look at that. Beautiful support, and he's going to try for resistance there. So we've been following this closely. I want to go to Ben, our first caller. We've got Ben from Tallahassee. Hi, Ben. How are you?
Great, Basil. How are you?
Good, thank you.
Great. I just wanted to triple check the weekly charts for the main indices, the SPY, the DIA, and the Qs.
Okay. So let's go to this. I've got the SPY up right now. So let's go to the SPY first. Excuse me. So the SPY at this particular point is trading at 209.37. What's really important for me at this particular time is this yellow oval pattern, which I call the Chapman Wave Stalk Leg Formation. Actually, it really needed a little bit more to the downside one more time towards the 205 to make a classic Chapman Wave Stalk Leg Formation, and then to scream higher above the high that was made right there at 212.52 the week of the 10th of June. But I'm looking at this, and if I look at I'm going to try to be as objective as I can. I'll do one thing at a time. If you look at the SPY, the fact that for 1, 2, 3, this is the 4th month, but it's not, we're only just over halfway into the month. So I can only talk about it as this exact moment as 11:19 on the 22nd of June. All I can say is this: at this particular point, there's a doji, big plus sign candle. The fact that it's gone this long and walked the 9-period exponential moving average, and if you consider that over the past, let me go to the. There you go. If you consider since the October low of 2011, since that low, the SPY has closed under the 9-period exponential moving average once, just a fraction, back in May of 2012. It closed well under it with that horrible candle of August of 2015, where that August 24th smash to the downside occurred. And then in September, it closed below. So we've got 1, 2, 3, and then it closed below the week, January and February. So we got 2, 3, 4, and it hasn't closed below that since. And if I try to put the picture into a cognitive formation, in other words, I'm looking at the chart and I'm saying, hey, wait a minute, you've gone 11, so you've gone 3 years, and in 3 years of monthly trading, so that's 36 months, it's over 36 months actually, you've only managed, or maybe it's, whatever it is, let's just say it's over 32 months, you've only closed below the 9-period moving average 4 times. And in the most recent time, because you've got to put that into the picture, because the most recent time would say if you're starting to close below that 9 EMA, all of a sudden you've got a change of pattern, because since the May high, back at 213.78, May of 2015, 3 out of the 4 closes below the 9 EMA has been subsequent to that. That says if we had to close this month below the 9 EMA, which is at 204.97, let's call it 204 to give it a little bit of room, 1 point room. You've got to say then that's the potential for a change of trend. So I'm looking at this and I'm saying, yes, there is the Brexit news coming out starting tomorrow afternoon, but we will only get it as an active closure of the vote on Friday morning. With that said, all I can say to you is, if I'm looking at this United States growth of, what was it, 0.75% in the first quarter and maybe 2.4 something in the second quarter, there is an increase in the growth, but it still looks like it's only in the 2% area for the year. But that's not negative. So I'm saying if you try to put the whole package together at this particular time on a purely fundamental basis, I don't see anything yet in the GDP that says, whoa, be careful. And I don't see anything on a technical basis. So I like what I'm seeing. The fact that we've already gone in the SPY to a peak D is very unusual, because the low of 181.02 in August was not taken out, because it was 7 cents higher at 181.09 in that was a January or February low. And that says to me, it's a little bit more mature, but if I put it together with the diamonds, the DIA, which is only at peak C and really struggling to get out in the weekly to break this Chapman wave inside wedge reversal area, but still holding over the 9 EMA, still has almost the same analysis in the monthly chart as I did with the SPY. The last 4 candles so far nicely above the 9-period moving average. All I can say is this is just purely on a, let's call it a technical level. At this particular point, I still see a really good chance of making all-time highs this summer. I think that's kind of part of your question, right?
Well, yeah, I guess the first question was what you saw as the wave count. So the diamond is peak C.
So it is a peak C,
and then
right?
the Qs are.
You see what's really interesting in the diamonds. In April, the week of the 1st of April, the high was 177.85. The very next week, the high was 177.88. Now, I could theoretically say, hey, that could have been a Chapman wave phantom peak, but I didn't want to do that. What I did is I grabbed the B that was made way back in November, the week of the 6th of November of 2015, and I merely said, you know what? I need to be as conservative as possible. I'm not going to call this a brand new B. I'm going to call it a continuation of the low that was made in August from 150.57, and this gives me a peak C. I'm being as conservative as I can, and even being conservative, so far this is just a high-level consolidation, and in this particular instance, it has more of the look of the Chapman wave stalk leg formation. That means there's the leg, and we're in the body right now, and the body starts the neck, which will be leg D if it can go above 181.42, 1 penny higher at 181.43, which is really only less than 3 points away, 300 points.
Right.
We could do that by Friday afternoon, Monday, if everything's good, or we could be retesting the 175's low. That's important. My bias, as you can tell, is to be looking at this as a positive. I'll go negative if I see that we're breaking absolutely key support levels, and on the diamonds, that would probably be way down the 140, 174, 173 area. In the SPY, negative, it would be in the 205 to 203 area. Start breaking that, and I have to say, we're going to go sideways for a little longer. I'm trying to be as negative as I can, and I keep coming up with positive results.
Right.
That's the only way I can look at it.
And the Qs in the weekly, Basil?
See, now the Q, this is a very different thing, because the Qs have been struggling, and I'm looking at the Qs as laggards, and I'm looking at the Dow as somewhat of a leader. But now the New York Stock Exchange. Hey, can you hold on a little bit, Ben?
Sure.
Okay, we'll be back with Ben. This is a very important moment. I think a lot of people are looking to say, where are we going? And I'll try to explain it. I'll be back. Dow's up 69. Be right back after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So here we are. We got Ben on the line. Ben from Tallahassee. We're looking at the New York Stock Exchange. There was just a sudden slight down move to the downside. There was the Dow now only up 54, having been up 69. And there must be some news out there. S&P is now 813. Oh, I wonder what that news is. Anyway, we're looking at this in the New York Stock Exchange, and you'll see that the weekly chart has made a decisive arch formation, meaning that as it's gone higher, the price always moves to the right side of the chart. That's the time. The height obviously goes either higher highs or it goes lower lows. What's really important about this is that within the context of the pattern that we're looking at, you can see that at 10,522, it's up 31 right now. At what it's doing is it's gone basically sideways for about since the middle of April. But that sideways move has been mostly above the 9-period low. In fact, every single week it's closed above the 9-period moving average since it broke above that was in the first week of March. So I'm looking at this and I'm saying, okay, the evidence right now is that all the action is within a sideways move, but slightly higher highs, slightly higher lows. And until that changes, I like that. And the MACD is good, and the stochastics at 77%. I'd prefer if it was over 80, but the price is holding up, meaning the stochastic has room now to move higher if the price moves higher. So even the New York Stock Exchange, which was lagging very badly, and I haven't made a big deal about the New York Stock Exchange because my thinking here is that for the first time since about the 1980s, I think, I'm absolutely satisfied with the makeup of the Dow. I think it reflects fabulously the entire market. It's just a little too heavily weighted in the financials. I would actually get rid of American Express, AXP. I just don't think it's necessary to have American Express, but it's got Visa, it's got MasterCard, it's got it's got banks, the JP Morgan. So this is
Hey, Basil?
Yes.
Yeah, I'm sorry. Could I? Yeah, I just wanted to ask my question on kind of what my thoughts were and see what you think.
Sure. Let me hear it.
Yeah. So what I was thinking about doing right now is do nothing, and what I was going to do is if with the diamonds, wait for the diamonds, the Qs, and the SPY to all make at least peak Ds, and if there's a positive response on Brexit, is then short based on being at all three at least being in peak Ds or leg Ds.
That's the weekly, right?
And then if on the weekly only, yeah, I'm looking at weekly. Yeah. And then on a negative standpoint, if it's a negative news, is that since all three haven't made their peak Ds yet, is wait for this thing to drop, and then try to nibble at the at the negative news for one more positive pop. That was kind of my thought process.
So I like that thinking. And as I said before, right now we're in a news-oriented market. And that says, let me just look at a chart here. I want to go to the E-mini ESU just on a short-term basis to show, look at that. We made a peak E. We were just about to try to make another high, and it stopped dead at peak E, and now it's gone down to that support area. So there must be some news here that says, hey, maybe the vote is not whatever it is, or maybe it's the Fed. I don't know. Whatever it is, it's news-oriented. That's why I'm looking at the chart and I'm saying, okay, I don't want to be news-oriented. So I agree. I think your plan here, my plan is that we're in a long position. We've got a little bit of a cushion, and we've got quite a bit of cash. We've got some positions, and I haven't got carried away. If, in fact, there's a big gap up on Friday, the big question is, how do you trade the gap up? Do you now say, okay, now we've gapped up, let this run its course, and then I want to short, have it come back, find some stabilization, and then go long? Or you want to try to play the short? That's going to be very difficult, because if the XLF, let's just take that as an example. It's a good example because it's a very important one, the financials, which is just kind of dead at 22.93, it's just stuck in a little bit of a range between 23.20 and 22.50 right now. So that, in a sense, is saying don't get too carried away, because what you really want, the preference is to have the financials with you. That's always a good sign. So I think your plan is good. Whether or not you actually short if the Dow breaks above 181.42, that's going to be a question, because within the context of patterns, a breakout, if this is a Chapman wave stalk leg formation, that D can go a little higher. It could even go to an E. But then what happens is you'll come back to the breakout level. In this case, it'll be 181.42, which we haven't even reached yet on the upside. But that's the way I would deal with it. So,
well, I guess that was my question for the Qs too. Did you happen to get a wave count on the Qs weekly?
Yeah, the Qs Weekly has made a peak, a gray peak A, and it's just stuck, and it looks more like it wants to test the low side than the high side, and it's making a symmetrical triangle. And what I've said is very simply, the Q is going to 110.80. No, I'm going to make it 111. That are 107.91. That's a breakout on the weekly, and going under 104.50 on the weekly says it's a breakdown. So I'm just making it real simple.
No, I appreciate that. Thank you very much. Now, you got maybe just 1 minute for a really, really crazy question.
Question away. I've had them all. No, there's nothing that's crazy. Yeah.
So in the world we live in today, with all the great technology we have, why can't we just let a stock market run 24 hours a day so that we don't have to worry about these gap ups and gap downs? We can set our stops in place, and we don't have to worry about losing out on these big run-ups and run-downs. Is it because you got to have people in seats between 8 o'clock and 5 o'clock, or 9:30 and 4?
We are headed that way, and in fact, I've started preparing the next. I do this every many years. I start preparing the next phase. I write a whole report. I make a big deal out of a big report, and that report would have me say that probably the day that the trading goes 24 hours a day, and that and people are just trading everywhere you go. My original thing in 1986, 87, that was turned into a chapter in a book called what is it called again? I don't believe I'm forgetting the name of the book. Anyway, whatever it is, the concept was that at some point the heading was mile-high skyscrapers, massive ships to nowhere, cars, 250 mile per hour standard cars, and stock tickers at McDonald's. That was way back in 1986, 87. So my thinking is that when we get to the point where you look around and just about everybody is trading off their cell phones, that will be the major top, and that's going to take a while. So I think we've still got a way to go. But I think
I think it would eliminate so much insider trading and corruption, because nobody's going to have that information to trade, at Friday
overnight type, right?
3:55 and Monday morning, they know it's going to pop up 60%. Nobody else knows that, right?
Yeah, you'll never change that. There'll be a way of getting through that. But I absolutely think you're right. You hit it right on the button, and that's 24-hour trading is coming to your cell phone nearest you. So
Can't wait. Thanks a lot, Basil.
Good call, Ben. Thank you for calling. Folks, the Dow's up 28, S&P's up 6. We'll be right back. Oh, S&P's holding up nicely. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So, Dow's up 21, S&P's up 5. Let's just run the gamut here before I answer some of the questions. IBB, up 4.56 at 259.36. Interesting how the frog gets in the throat right then. What we're looking at is that the IBB touched the 261.80 9-period exponential moving average for the first time since it broke down back on the 9th of June, and it hit 261.94. 261.82 is the number, and it's just testing here. Where it closes is going to be very important because I almost wanted to go long as a trade the IBB. We've had some fantastic profits, but I missed this last move down from the 287 area all the way down to yesterday's low. Very upsetting. First time we've actually missed something as big as that in the IBB. Big deal. So we'll try to make it up sometime. But look at the stochastic and MACD. Just a possible turn to the upside here. And sitting on the 200-period moving average in the weekly chart, this is the first opportunity. I'm saying opportunity. Doesn't mean to say it has to do that. But I am saying that if we can see the IBB start to lead going into Friday at 2 o'clock, it's after the news, whatever happens, and it's able to get to the 263, 264 area between now and Friday at 5 o'clock. I think we've got ourselves a nice bounce in the biotechs. That's going to help the NASDAQ. So I want you to do that. I want you to do BRK.B. Very important stock, one of the great business managers of all time, or owners of businesses, Warren Buffett. And look how nicely it's holding in the monthly chart. Look at the weekly chart making a U-shaped pattern here, trading at 144.11 BRK.B. And that's the B shares at as I say, 144.10 up 0.57. Nice action if it's able to close above that high that was made back in May 25th at 154.94. If it gets to the 145s, I think there's a good chance that Berkshire is going to actually start to lead the way to a breakout. That'll be very important. What was the other one? Oh, FDX. FDX is slumped. It's down 6.46 at 157.49, down 6. Now, I often do this. Do you remember? Some of you might remember when I said, would you rather be buying, was it gold or the SPY? They were at some point, they were exactly at the same price. So this is the same thing. At the 157 area level, would you rather be buying a Federal Express or shorting it, or would you rather be buying something like the IBB at, it's 259. Sorry, I was looking, I had it before. There was another $150 stock. And I sometimes like to look at them as pairs. One's going to go up and one's going to go down. They cross one another. All right, well, that's not the case here. Federal Express is going to impact the IYT. IYT is down just a little bit, down 48 cents. But the transportation index really it has to break into the 143 area. It's at 136 right now. It must break that down channel. It just that inside wedge. That inside track, Chapman wave inside track resistance area. So this is going to be quite important. I'm looking at high-grade copper, just to give me a second here to do all these different things. High-grade copper's had a nice bouncing leg C, still stuck within a trading band, but I'd rather see it going up to higher highs than lower lows. So I wanted to do those, and now I can go to some of the questions. No. Yes, SCO, I was asked about that. That is short. ProShares ultra short Bloomberg. Well, it's trading at 81.43 right now. It's up 2.05. In other words, crude oil is down. And so if I look at this, and USO is down 16 cents at 11.74. What's really important about this particular move here is that this inverted V-shaped pattern and Eiffel Tower in the weekly chart. This is really important because what it says, and I typed this in ages ago. It says probably will need to test the 9 EMA a tad lower. It says crude can rally a while longer. And that's been, I typed that in, a month or two ago. So this is saying to me, this is the first time that we're looking at the chance that crude oil, now let me go to the USO. That was the short USO, let's call it that way. This is the short crude oil. Now let's look at the long crude oil. And long crude oil says that resistance at peak F in the daily chart at the 200 period moving average, it's important because it creates a magnet at 1232. But the further away you go from it, the longer it's going to take to get back there. So I'm looking at this answers a couple of questions about oil that I had. And what it says is that at 1232, it couldn't hold it. It just did it for one moment, a brief moment, and then it closed the next day. So that little reversal there says at 11.74, down 15 cents. If crude oil takes out 11.51, there's a real good chance it's going to make the lowercase h formation in the Chapman wave. It means there's a good chance that it's going to test the 11.11 low. As it stands right now, unlike crude oil itself, the continuous contract, which in the weekly chart went to a peak D, the USO is one behind. Tells me that there's a chance that crude oil is going to go to an E as USO goes to a D. So to answer the question, what do I do about the SCO? The SCO right now, I think that you might see one more test, maybe not to the low of 73.91, but I wouldn't be surprised if that gap between 78.25 and 77.05, that's what we're looking at, and it gets touched. And that's where we start to look to see, are these positive divergences in the SCO, the direction share? This is the ProShares ultra short Bloomberg. Is it trading 81.50 up to 12? Is it telling us that we are really close to a bit of a deeper pullback in crude oil? I don't know. That's the answer. That's the mystery that we're waiting for. Let me summarize again. I think crude oil has a chance to go towards, or maybe even breaks above, the USO. That's the United States Oil Fund. It trades, I think, at a certain price. I don't know if it's 10th or whatever it is, or 20th, 30th. I don't know what it is, but it trades with crude oil itself quite well, not 100%. I think it's going to test 12.45, go to 12.46, slightly higher, and then pull back. And that's the pullback that you want to be looking at, possibly shorting. But at this particular point, I think that SCO needs a little bit more time. Then RBQ, I'll do that one more time because it's in the same sector. RBQ, did I not do this? RBQ. This is New York Harbor Blend. What happened to my notation? ABC made a peak D in the weekly. It made a peak A, B, C, D, E in the daily, and it's making a sort of a V-shaped attempt to just retest the highs. Yeah, it could just maybe touch the high, make a V-shaped pattern, and then consolidate again. So that's trading at 1.595. So, okay, we've done that, and now I'm going to go to the XAL, which is the airline index. Look at this. This is very important. It's trying to rally. It hasn't got any legs yet. I want you to look at Wood, W-O-D. This is telling us about the global iShares Timber and Forestry ETF. And That's a stuck-in arrangement. It has made peak D in the weekly chart, and the monthly doesn't look that great. So I'm going to do this. I'm going to say that within another few seconds, we're going to go to our penultimate break. Basil Chapman, Dow's up 20, S&P's up 5. I'll be right back, and we will look at what to expect for today, maybe going into tomorrow. I'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Just real quick here. This is the 2-minute chart. If you're looking at 2-minute charts of the, this is the Dow futures right there. Made a peak D way back at 10 o'clock at 5 minutes to 11, just before my show. I got the down arrow, you can see. The E-minis made a top at 2091.25, did a retest. This is in Chapman wave patterns. Look, this is the H pattern upside down. Remember, this turns out to be, that can turn out to be a bearish double top. The Chapman wave drop bucket pattern, and that goes with like this right here. That's the pattern, inverse upside down Y, and that's like a dreaded H upside down. So in this case, that's what happened. Once you take out 1/3 to a half, you're going to test the low of the lip of the cup, the lip high, and then the bottom of the cup, and then they could double 1-to-1 to the downside. So this is where we are. All right, let's get to the nitty-gritties of some other things. Just real quickly, EFA. Let me go to this chart right here. EFA is the, what is it, iShares EFA ETF. This is an international European ETF. And I'm just looking at it and I'm saying, it's stuck in a range. So now let me go to this, because it's messing around now is not good enough. Let's just go right to the nitty-gritties. The VIX index. The VIX at this particular point is going to be quite important going into Friday at about 10 o'clock in the morning, and I'll show you why. Within the context of this VIX peak E, I'm calling it a peak E right now. I haven't yet been able to put a down arrow. I should, but it hasn't closed below the 9-period moving average. And the MACD is still good, and the stochastic has gone to 59. So technically it should have a peak E from the 2289 top. But everything about the VIX index says that it often fails at a peak C. That's number one. Number two is the hysteria last week seems to be greater than it is now, seemed to be at that time greater than it is now. And it's reflected here. So if there's a surprise going into tonight or tomorrow, whatever it is, just look at the VIX. If the VIX goes into the 20s, the high 19s, into the 20s, this market will pull back and probably pull back triple digits. Just keep it simple. And if, on the other hand, this VIX suddenly starts to plunge and it actually takes out the 17.089 200-period moving average in the daily chart, 16 point, what is that, on the weekly? Well, we wait till Friday. Right now, it's in the 1690s. So we're looking at the chance that if the VIX does fall, last week was alone. I keep getting questions. The question on here said, Gigi says, EFA and EWG, that's Germany, did Europe put in a bottom last week? You can't answer that because this is an unknown. People are voting. But if I'm just looking at the charts, I would suggest that not too much has changed in the general market, and there's still selectivity enough for the Dow to move higher, and there are enough stocks to cream the market. But if the IBB is reflective, now it's up 5 at 259.77. If this is reflective of a change of trend, I want to see the IBB get back into, that's the biotech, the Nasdaq biotech ETF. I want to see it get back into the 263, 265 area, as the Nasdaq, the QQQ, instead of being at 107.90s, is at 108.90s. Preferably 109.20s this time next week, on Friday, two sessions time. And the VIX pulling back under 16, or even hanging in the 16s is fine. That to me would be a very bullish sign. VIX pumps up, the Dow breaks 17,670, 16,700 support. The SPY drops 15 points or more from here, going to the 2070s. Then we're looking at a timeout, and it's just going to continue this sideways motion. I don't think we break down per se, but we do take a bit of a breather. So as it stands right now, my bias is to say I think I'm looking to the upside, and we're going to be trading that way, even though we're much lighter than usual. Hey, have a wonderful day. Stay tuned for all the shows, and I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.